Okay, good morning, everybody. So I think it should be live again. Just a second, check and see a quick moment. Refreshing my pages. Don't see myself yet. Today's Wednesday, July 2nd, 2025. Let's see what we have here today. Um, Come on. Just need to refresh the page a bit because it's still not showing that I'm live yet. Let's see here. Let's try this again. All right. Oh, there we are. Okay, so I think we are live now. All right, everybody. So we have this trade idea going on. We have an S&T low created by dipping down into yesterday's PM lows. ES didn't quite do that low. You see that up here. We'll see the US 500. See how we didn't even tap that low. Yet we're creating it on a daily range that has relative equal highs. So this would be considered a type 2 daily range. I'm still feeling really bullish about the stock market lately because right now what we've been seeing in terms of the dollar, bonds, interest rates, we should still be considered under that risk on scenario. So the stock market should still be seeing higher prices. If we could take into consideration the Sunday opening, um, we could see that we're just right below the Sunday opening at, let's see here, at 6 p.m. Eastern time. So if we're going to be creating a bullish candle, right now would be the best time to buy. If, right? If. So let's take a look at what is it that we're trying to look at here. And again, this idea stems back down uh, from these lows that were created via SMT. You'll see that here yesterday at the AM at 11 we had these lows created. This morning we tapped on it. You see, we compare it to the ES, which is the S&P 500 futures. That low was never really tapped again, but it was tapped on NQ at a time where we have this type 2 dealing range anchored from this high to this low. See that? So we were just waiting for price to close above the 25% level, retrace back for a bit to go higher. And you'll see that, shoot, you see that being represented by this red range that we have here. I'm going to go ahead and delete these from yesterday so I can clear up my space. So now you'll see that the low came in at 22,423.7, and then the low here is 22,424.1. So you would have gotten tapped in on a limit order or on a stop order if you had something like that set up. And now you're anticipating price to just keep going up higher to reach up to these highs. Up to what time? Let's see. Up to what time would I see this manifest? Until today at 11:30. So I'm gonna move this until 11:30 before the lunch macro. Again, we want to see these relative equal highs be taken around that time. It could happen earlier, it could happen a little later, but this is just for me to move my stop loss if it goes into my direction, right? And we reach the if it goes into my direction and we have yet to meet the external range liquidity, I will just move my stop loss to break even. This is also a good time filter so that if price is still moving in a zigzag way and it's still not going up to the way I want it to, I can just cancel the idea, right? So this is something that I've been coming up with, like how long should I be holding onto an idea before I give up on it? Is this just literally my BPR theory, and that's just the theory on how price leaves balanced price ranges and how it trades to them and through them. And now learning about dealing range theory, I'm trying to combine that and trying to see if there's the correlation because this idea also kind of stems in from the dealing range theory, the fact that we're always taking a swing low and a swing high. You could have argued, look at this, swing low taken, swing high taken. This is a dealing range. Okay, okay, another one here. Swing high, swing low taken, swing low, swing high, taken again. This whole thing could be a dealing range. The problem is distinguishing which ones are the good ones, and I think combining this with my balanced range theory, I think it gives me a good anchoring as to how as to which dealing range to rely on for this certain time. And right now, at this time, we're dealing with this type 2 dealing range, relative equal highs. We broke through 25%. You would have anticipated a small retracement. Uh-huh. And let's see here. Let's take a look at this closer. We got the 5 minute. So I'm thinking this might just be even be like a what's this called? Institutional order flow entry? No, not even. This would probably even be considered an immediate rebalance. So we're anticipating price to go higher. How high up to here? For this time being. And I'll show you guys again. Hang on a second. My music is going crazy. Let's do this one instead. You guys don't hear my music, right? I don't want to get copyright on YouTube. No, you should be good. Today's date also has a couple of news. I lied. There's no news today. So it's just going to be a really quote-unquote dead day today. But I really do anticipate, because there's no risk of red news folder or anything like that, there will be less manipulation. So price will just reach the targets that it needs to reach. I did also mention yesterday that we were going to fill the opening range gap electronic before I left yesterday. So let me go show you that now. I said that if we're going to keep going down lower, we're probably going to be looking to fill that electronic trading range. Excuse me, electronic trading hours opening range gap. So you see that I had my close, I had my open at 12 a.m. I said that if we were going to consolidate here yesterday, remember we had that long, and then it started selling, but we got out of it because we saw on the lower time frame the way it was behaving, how it was kind of beginning to disrespect our BPR ranges. So because we saw that, we saw price go down further. Notice where it's tapping to. So it's high. You see how it's wicking above the 25%, wicking above the 75 equilibrium. Sorry. Okay. So the internal range inefficiency levels. See how it's reacting off those? Wicking. Eventually close down below. So in a way, we're kind of cooked because now guess what? This is not being treated instead of a bullish array, right? Premium opening means it's like a, think of it like a long-term busy. Once we get close below it, this now becomes a premium array. And look, we just dove back up to it here, and now we went lower. But it's still under the pretense that we might see it go higher because of the of the seasonal tendency. July tends to be one of the most bullish months for the stock market. So that's why I'm still feeling pretty bullish. The fact of the matter that the dollar is still going to be like a falling knife right now, still continuously dropping down to lower levels. So I really do anticipate the market to give us a big push forward. We've reached new highs. So yeah. And again, the opening range, I mean, not the opening range, the opening price of this week is located up here, sorry, excuse me. So anything below 22,748, it's a good discount price for you to go high. Imagine like if we're creating that wick before the big push up. So those are just a couple of things that are on my mind at the moment. So if you want to get funny with it, we can also consider the new close and then the open at 12 o'clock. So we had this premium busy. Sorry, again, premium openings. Sorry, we had a premium opening. So this would be considered a discount busy. and you see that we traded through it. So could we be treating this as a premium right now? I still think we're going to be trading towards it. And remember that entry that I showed you guys earlier? You would have been getting entered right here. That wick would have tapped you in on a limit order. Very beautiful. And where are we aiming for? That relative equal highs from London, which, as I've said before, you want to think of this as a premium array, but because we're trying to aim up here to these relative equal highs on London, I think that this is going to be traded through. Now, if you want to scalp this, let's see how can we have treated this. Or actually, you know what? Let's take a look at the liquidity that has been left behind, kind of like points of interest of where do I think price will be reaching towards. I mean, think about it. We also had the stuff from yesterday. So you see that yesterday we have also reached the PM lows, which was the lows that were left over after the opening range from 1:30 to 2 o'clock. So we were anticipating that to get filled sometime in the future. We also have the pre-market highs that we had left over yesterday. Oh, and the high here from London close. But the pre-market highs that we were interested in yesterday, we still have the 12 a.m. highs that we were interested in yesterday. So let's take a look at the ranges because I have yet to do that yet. And before I do the opening ranges and the first percentage fair value gap study, take a look at where we're at right now. See this? Remember that idea I gave you? Just now when I started the live stream, 422, 424. This is a CFD market, so far it's going pretty well in our favor. Okay, would I have already set this trade for break even? No, not yet, because I'm waiting for 11:30 to strike. That, or if we close above 50% equilibrium. If we close above 50% equilibrium, then I'm moving my stop loss to break even because we moved another quadrant up. So it's a significant move in price action. That's measurable, and it gives me confidence that perhaps we can see price continue going higher. It doesn't need to go back downstairs. You get what I'm saying? So that's why those are the either two conditions that would have made me move my stop loss. Sorry about that. Just took a quick sip. Let's go back into the futures market and see what kind of gaps we can find. Okay, so let's see. Where did I leave this off? Did we do Asia yet? I think we did. No, we haven't done Asia. Let's see here. No, we haven't done Asia yet. So I'm gonna bring this over, and I'm gonna go to the 1 minute. Let me get rid of this before that distracts me, so that we can keep things clean, right? All right. So the Asia opening range again tends to be from 8 p.m. to 8:30 p.m. Eastern Standard Time. So I like to take the range high to low. Okay, so did we encapsulate? Yes, we did. Where did price leave the range first? Lower, right? So you want to see this match over with a protraction. Now I did mention that when it comes back to the range, the overall range, it's either going to treat it as like a retracement, set up note, getting there, like OTE, and then keep selling downwards, or it's going to break through it and act as like a reversal. So this would have been the manipulation leg of the Asian Open. So you can see it did. So because it did that, I want to refer back to the Asian lows. Very, very important. And you'll see that in the future, it was referred to, as well as the PM lows. Okay, now, where in the world is my first percentage fair value gap? So let's see here. You see, I consider this like to be a buy-side delivery. So it can't be the 8 p.m. candle. It has to be 8:01 moving forward. Okay, see that little sibby right there? Okay, I'm gonna just label it nicer. And then match the color. And then we'll do reverse this because the first one that created was the high and then the low here. So because this is a discount opening, how would you refer this as? You would refer this as a SIBI. So you would anticipate price to use this as a premium array for it to sell lower. You'll see that it did momentarily before it got broken through. But look at how many times it got referred to. And again, because we got out of the OR lower, right? And let's say you somehow knew that price was going to continue to go upwards. Notice how